Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello, oil friends. Looking at the daily, weekly, shorter term time frames, the bears are still in control, not confirming the bullish candlestick from yesterday, lower highs and lower lows. And now that we've broken the lower $49 range, that was the level I pointed out in recent videos because that's where we have built a base on this consolidation. Now that we've broken that level, we're back to trying to find support on this extremely bullish breakout that we saw after the pattern broke on the OPEC meeting. So there's not as clearly defined support levels as there were up in the low $49 range. So we can be looking for further pullback this coming week as it is a weak candlestick and a weak close on increasing bear volume. Bearish reversal spinning top after 5 green weeks confirmed. And again, I keep saying it, we could pull all the way back to $45 and still be forming higher lows on the weekly time frame. So we're going to look for further downside, but it is not ruining the bullish trend that is currently in place since February. Looking at oil on the hourly time frame, we saw those 4 rejections from $50. I drew this downtrend line this morning. We had one more attempt on a potential bullish break. We rejected from that level, and then that led to further downside and a dump. There was some oil news thrown in there, but certainly the chart favored the bears when that news came out. So now we're seeing a little bit of an oversold bounce, cooling off the RSI on the hourly that did get pretty oversold. But at this point, it is looking like it could be just a little bear flag of cooling off the RSI to the upside before continuing to the downside and hitting lower lows. So keep an eye out for this bear flag continuation pattern to potentially form. If we get up and break $49 back to the upside, it won't be a bear flag, but we still will look for lower highs. We can see another downtrend resistance line. We can draw it sharper here, hitting the most recent lower high. So the point being, there's lots of resistance levels and the bears are in control. After support of 48.39, the low we've seen here, need to condense the chart on the 4-hour time frame and try and find the next support level. And I have to go all the way back to early October, and I'm looking down at 48.24 if we break 48.39, and after 48.24, 47.84. So bears are in control, clearly changing the trend to lower highs and lower lows. And again, once we broke these low levels, 49.50 was red flag number 1 for the bulls. We had 2 lows off of that level. And then down here, 49.12 was the second big clear red flag for the bulls. And now we're seeing continuation to the downside. So we'll check back in next week. I appreciate you watching. I hope you have a good weekend, and I'll see you soon.